managing real estate is just common sense. There's really no rocket science to it. It's common sense and getting off your butt, making the thing look nice because people want to call that home. And if it looks like crap, somebody's not going to want to live there. And, I can't get the rents I want. It's like, are you just stupid?
Welcome to Commercially Speaking, the podcast where I teach my little brother all about commercial real estate.
This here is my brother, Bo Barron, CCIM.
And this is my brother, Timmy Barron, ADHD. This is Commercially Speaking.
Oh, yeah, very good. That mojo's running now. Oh, yeah. Eric, what's the name of your band that you play with right now?
It's called the Bullocks. My best friend is a guitar player in the band. He's from London, and he had to explain what that meant. Apparently, it's supposed to be a positive thing versus something else.
I like it. I think it sounds good, but it does make me think of it. Dog's sack.
Eric, meet my brother, Timmy. Timmy, meet Eric.
Hello, and welcome to the show. Today, we're joined by a true expert in the world of apartment brokerage, management, and ownership. Our guest is the president of WSC Realty Advisors and WSC Property Management in Long Beach, California. With over 15 years of experience in the field, he has dedicated his career to everything apartments, which is also the title of his podcast, helping real estate investors of all levels and backgrounds to achieve their goals. We're excited to have him. Eric Christopher. Welcome, Eric.
Hey, it's great to be here, Timmy and Bo.
How do you two know each other?
Well, I was his coach. We probably got matched up together because we were both military guys. And so, Eric, you were in the Navy, correct?
I was indeed.
Would he have been at that event that you...
No.
No? Oh, okay.
Eric, about once a year, Rob would bring all the coaches in. And we hired Timmy to kind of MC and provide the entertainment, which I talked Rod into doing. And so I was like 50% really excited because I know the talent that my brother has. And I was 50% thinking this decision might cost me my job because he might do something a little bit over the line. Rod was telling him before we had that meeting, all these things that he couldn't do. And I'm thinking, don't do, like, if you tell a comedian the things that he can't do, those are the things he will do first, you know? And
that's what I said to him.
He's like, no. It's like, well, the more you emphasize it, the more I want to do it. And I was just like, I'm so getting fired. But it couldn't have gone better. It was really good.
Yeah. Eric, I want to ask you, because I don't know you at all. Can you give like a 3 to 5 minutes of who you are?
The military started, right after high school. I highly recommend that for like almost any kid that doesn't have a really, really strong idea what they want to do, which I did.
Totally agree.
Literally 2 weeks after high school graduation, I'm in San Diego getting my head shaved and starting to do push-ups. So that was the, meaningful beginning, and then basically got out 4 years active and started my college thing, working for my dad in the commercial insurance space. And, that was a good experience into sales and getting out and meeting people that you don't know and kind of presenting your ideas. In college, I got a degree in accounting from Long Beach State out here, really got myself honed in around the numbers of business flowing through a business, which really interests me. But as I got to the end of my college tenure, I was like, this is going to bore me to death to have to do nothing but this every day, all day. And that was kind of where the sales side of the world came in. So eventually a friend of mine back in the late 90s was a commercial real estate broker. He's pretty successful and said, hey, if you're going to sell something, why don't you get into the major leagues, right? So I had a brief foray at the beginning with a firm called Sperry Van Ness. Kind of had to do like a lot of brokers do early in their career is you run out of money, and had to take a break, so to speak, but was able to come back in a little over 15 years ago. And it's been a very positive experience in life, just learning how to invest, learning how to operate an apartment building, learning how all this stuff works. And I'm sure Bo can attest to this. You're never done learning, right? Every day, every deal you do, there are no two alike. And that's kind of a charm for me in it, because I'm like your title, ADHD. I'm probably right there with you, never diagnosed, but certainly play the role pretty good. And I get bored. I get bored with almost anything and everything quick. And so having that variety, each deal, each interaction, it does keep me checked in.
Did you specialize in apartments from the very beginning, or do you have a path to get there?
it's been 99% multifamily investment and management.
Our listeners, some of them own apartments, some of them want to own apartments. And what are some characteristics that make for a great multifamily operator?
To answer that question, it's sort of like the precursor is the asset that you would buy. A bad asset in a bad area, you can be the strongest operator in the world and you're still going to pull your hair out. So assuming that's sort of middle of the road, middle of the bell curve, broad swatch is like hands-on attention to detail about operating the asset.
This would be someone who's managing the apartment complex, right?
Well, let's back up for just a second and just give a little context.
Okay, so you got an owner and they either manage themselves or they hire it out. And it could be that the old couple or whatever, they want to retire, and they live right down the street from the building, but they just don't want to talk about tenants, toilets, termites, or trash anymore, which is totally understandable, right?
Timmy just dumped a drink on his lap.
Gotta be careful saying termites around me.
Hold on. I'll be right back.
Hey, I'm all cleaned up.
Okay.
Bo helped me clean up. So yeah, back to termites.
Yeah, I mean, I'm an owner, but I'm also a third-party manager, and I totally get the idea of wanting to have control, because most owners of real estate, they desire to have control, at least to a certain degree. But it comes to a point where, and I know I'll see this point in my life at some point, it's like, I don't want to hear from these people. I don't want to hear about repairs. And that's when you hire a firm like mine to go in there and just basically, at the end of the month, I send a set of reports out, like I'm working on those right now, and send the reports out to the owner and the money. And many of them are like, that's as much as I want to see after that. So that's kind of the two sides of the coin for building management.
So what are some examples of bad management?
So where does it all start? Oh, there's a little quiz for Timmy. You've got a box that's a piece of real estate. What's the first thing you need in there to make the cash fall out of the bottom?
A tenant.
So that's the first big hurdle that I find: tenant selection. Your whole business is driven off of these people, or, commercial side, these companies paying you money in a timely basis and not thrashing your real estate. So that's the first disconnect I see all the time.
I've worked with a guy who's an apartment buyer, and he's a great operator. And when he puts a property under contract, he prevents them from leasing any more units. He does not want them just stuffing heartbeats in apartments so that they can sell it at 100% occupancy. Because you think I'm going to want that. I don't want that.
That's a very strong buyer. You're going to be going down the pipeline to get a loan on this new thing, and the bank is going to freak out about any vacancy you have and may cut your loan dollars, may, throw you some curveballs. But like, if this guy's a strong buyer, and who knows, maybe he's even buying for all cash.
Yeah, he's very strong, puts a lot down, doesn't do all cash, but he's also, the president of a board of a bank.
Here's a nightmare real quick out here in California. And I don't know if you know the difference with this. Maybe you do. Maybe you've read about it in the news. It's like, it's darn near impossible to evict somebody here. I interviewed a couple property managers over in Arizona, and I said, well, tell me about your eviction process. They go, oh, eviction, yeah, they happen in 30 days or less, and there's really no argument about it, and there's not a lot of attorneys that want to work the tenant side because there's no upside for them. And it's like, I just got done with one, and the gal had not paid us a dime of her own money since prior to COVID. The attorney's fees costed $20,000, and she left us with a $10,000 debt. During the throes of COVID, we were so close to losing that building. It was only just like me talking to this bank every day or every couple times a week, like, here's what we're doing this week and that week. And you make the wrong decision on a tenant here in California, you're in for a ride.
What are some of the great things that a seller can do to make their property more appealing or easier for the broker to go out and find the best buyer for them? Like, what are some things that the owner can do to facilitate that process?
What are some things the owner can do to make it more good?
Or even more better?
Appealing, more better.
Yeah.
Even better. To optimize the sale.
Yeah. A
good friend of mine told me one time, and it's kind of goes toward ownership too, is Like, just because you don't have a lot of money doesn't mean you have to be a slob and a scumbag. So, like, turning that to the owner, it's like some of these folks are completely oblivious to the idea that it's not that difficult to create like a much better visual on the property when you're going to sell it than just to like leave it the way it is, like, screw it, I don't care. You know, it's like a little bit of common sense on that.
What was the name of the former Clippers owner? Because wasn't he kind of a slumlord?
Donald Sterling.
Yes. Yes.
He's kind of been an enigma out here in LA for decades because he was a huge apartment owner in specifically like downtown LA, C-grade assets, and a lot of Section 8 tenants.
C-grade. Do you understand what he means when he says C-grade?
It just sounds like not the best asset.
Years ago, I'm in an Marcus and Millichap conference room with my peers, and we're talking about A, B, and C assets, and this completely hilarious Armenian guy stands up and he goes, "Eric, I do not understand what this A, B, and C property classification you refer to is." And I'm like, all right, Kirk. So A grade property or A grade neighborhood is like where you hope to live someday. Maybe you do now, but that's where everybody wants to live. B grade is probably somewhere where you do live now. You can walk around at night and it's relatively safe. C grade neighborhoods are where before you get out to take pictures to do a listing proposal, you're kind of going to look around the sides of the car and down the street and see who might be there. And then D grade neighborhoods, which we do have here, those are the ones when you do the pictures for the proposal, they're a little blurry because you're taking them as you drive by the property because you're not going to stop or get out. And certainly in the C and D neighborhood areas, you want to visit those properties between 9 and 11 in the morning when the bad guys are still asleep. You don't want to go in the afternoon because that's when the 40 ounces start flowing and in the front yard. So yeah, that's A through D there.
Okay. So the other thing you mentioned that I want to make sure that we're clear on is Section 8 something that means something to you, Timmy?
No.
Okay. Can you explain Section 8?
Basically, Section 8 is a housing subsidy that comes down from the government to assist lower income people.
Oh, yeah.
Whereby they do an assessment, the government assesses the case and says, okay, we're going to pay, let's say if it's a $2,000 a month rent, the government's going to pay $1,500. The tenant has a $500 obligation, and that's done very routinely.
Yeah, and some people love to own Section 8 because they know they're going to get paid at least a portion.
Oh, right. That makes sense.
And then some people don't want to mess with it. When you have a tenant in there that doesn't have full skin in the game, it's easier for them to not care as much.
Sure.
That could be Section 8 or not.
It doesn't matter if it's Section 8 or a market rate tenant. You got to pick your people very, very carefully.
What kind of cap rates are you seeing on the Southern California coast?
Over the next 30 seconds, I'm going to share a couple clips from previous episodes of Bo explaining exactly what a cap rate is and an extremely easy to understand explanation from Casey Conway. At the very end of the episode, I'll have the link to the cap rates episode. And hey, while I got you here, why don't you go ahead and hit subscribe, ding that bell, let us know what you think cap rates are.
You buy a property for $1 million. You take the net operating income of a property, divide it by the value, and it tells you what the cap rate is.
Really, all a cap rate is it's the inverse of a stock multiple. So, we know if a company's multiple is growing, it's getting bigger in value. If it's shrinking, it's going less in value. Well, the same thing, if you inverse that, the same thing happens with cap rate. So when things are great and there's a lot less risk, the cap rate goes down, that NOI is worth more. If it's going up, that means a lot of bad stuff's happening. So a cap rate is just an indication of risk.
All right, back to it.
What kind of cap rates are you seeing on the Southern California coast?
We were on a trend up through, let's say, even a year ago or even 9 months ago that like just a bread and butter, 8-unit building in sort of a blue collar area, you're still in the high 4 cap range. We're starting to see those slide upward 5.5, and certainly with this interest rate environment that we're in, those will work their way back to 6 caps at some point.
See, right now in Kentucky, we're at 6. But man, when I got in the industry, 2004, 2005, 2006, like around here, everything was a 9 cap, which sounds insane to me now. But to listen to threes and fours. We've never seen anything like that. In Kentucky, everything here is slow, steady growth. And when I mean slow, we don't boom, we don't bust. There's going to be some appreciation. If you can increase the NOI, you can make something worth more. But it wasn't just going to be worth more because it existed.
That's a really interesting scenario that you bring up, Bo, because I've looked at appreciation in two ways, right? Like increasing rents, and we're trying our best to decrease expenses, and that's what I call organic appreciation. It's going to be a more positive story because you've got more dollars hitting the bottom line. The other side of that is cyclical appreciation. Like the whole tide's going to elevate, and your building that would have sold like, I don't know, in 2012 as a 6 cap, in 2016 it's almost a 4 cap, and you didn't do anything to the building to change the organic side. So I myself wonder, with this government overreach, and then you got a lot of high net worth people and companies leaving California. I don't know exactly when the inflection point of that affects our appreciation and demand for real estate. I don't know if it maybe ever does, but do you see California buyers coming into your market because of one reason or another that they want to get the hell out of here? Have you experienced that at all, or is that?
Yeah, there's a lot of California buyers moving and just buying, like moving their investments into Tennessee, especially. That's like a massive U-Haul corridor now, California to Nashville. How long has it been since there was actually out-migration for California?
Certainly not in my lifetime. And, it's such a strange dichotomy because, when you're a state government and you're going, okay, like we can't really afford to have people like Elon Musk leaving California. There's a reason why this is happening. And I think it's like everything else in the government, they aren't checked into like the reality of what's going on. Like Gavin Newsom, like a year and a half ago, he was asked about like, why is everyone leaving California? Oh, where are they going to go? There's nowhere like this. And, I'm concerned. I'm concerned that we're on a pathway here in California that we're not going to be able to fix at some point. So that was an interesting question of the dichotomy between, hey, you can go, like I'm looking at buildings in North Carolina and Tennessee right now, and you can literally buy them and have cash flow on day one. You go,
Yep.
Wow, that would be so interesting to like buy an investment and have it start paying you back like day one. But I think a lot of people might be okay with that, with the less government intrusion, just the less cost of everything we do. Go, hey, look, I may not make these windfall appreciation gains, but I can have a nice steady cash flow with fewer problems. And I think that's what's appealing to a lot of people right now. So
You mentioned something a minute ago, talking about 6% cap rates in, 2012, going to 4% cap rates in 2016. Let's do a little bit of math just for a second. So, Timmy, I know your camera might have pooped out on you, but
Yeah, I'm here and we're recording.
this will be a little quickie quiz on cap rates real quick.
Fantastic. Okay. Let's do some math.
So let's say you have a property with $50,000 in net operating income.
Okay.
Okay. And it's going to sell at a 6 cap.
You take $50,000 and multiply it by 6%.
Divide. You're going to divide it by 6%. 50,000 divided by 6%, which would give us what?
833,333.
Okay, perfect. So the value there is 833,000 and some change. If it's a 4 cap, you would expect the value to go up or down?
Up.
And 50,000 divided by 4% would be what?
100,000? Well, I mean like $1 million.
Yeah, I mean, you're going to be...
Over $1 million.
I don't know what it is off the top of my head.
I bet Eric knows.
It's $1,250,000, but I didn't know that off my head. I had a calculator covering your faces on the screen. So
Yeah.
What Eric's talking about is just because the market changed, nothing about that property really changed. It went from a 6 cap to a 4 cap. It went from 833,000 in value to 1.25 million in value.
Wow.
Just because it is there.
Right. Wow.
Like, we really have to improve things about the property because the cap rates don't get compressed like that.
Yeah.
Go down like that here, which is a big difference between his market and mine.
you can look on a freaking graph since end of World War II, that we've had these radical cycles of uptrend. You can look at that chart and go, it didn't really matter when you bought. If you just buy, you're going to win here.
my premise on wondering about this is I'm conditioned to one thing, these uptrend cycles since I'm born here. Will they continue? Sort of like when my son's out of the Navy, 4 or 8 years, whatever the hell, comes back here, can he expect that the next cycle will take him in the same trajectory that it took grandparents, parents, and myself? That's where I'm doubting a little bit, is the future of California and the lucrative nature of that uptrend. And I'm looking at a lot of my friends and cohort investors and people that, like I had a friend here that had partial ownership in about 40 different apartment buildings in Orange County. He sold everything and traded everything to Tampa, St. Pete, Florida, because he's looking at the writing on the wall going, I'm getting the hell out of here. And I can't argue with him for doing that.
Yeah.
Right?
Yep.
Yeah. I want to say something back to you to make sure I didn't miss anything. But when we're talking about mother effing investments, right? MF investments, was there something I missed from that?
Timmy, when you walk up somewhere, like if you're going to rent something, it feels good. Like you walk in and you go, yeah, this is somewhere I could call home. So you put together an environment like that, and then you price it at a little bit under market, because what's going to happen? Like your best chance to have success is when you lease a unit that you have a line out the door trying to apply for it.
Yeah.
Because that gives you the chance to handpick your best tenant. Your life is so much easier. They're happy. They're not going to be tending to want to leave in the next year because they found something better. You put that price point at something that's good for you, but gives them a little something, and you give them a cool place to live. And wow, magic, you have success. Like it's no harder than that.
Yeah.
All right, Eric, I want to hear a great deal story.
Generally, I don't ever want to talk to the people involved again when I get done. I'm grinding away trying to get my first listing, like stay in the business, get a paycheck and all this stuff. And I land this whopper of a deal. It's like an 18-unit deal. At the time, it was like almost $2 million, but it was under market rents. Like it was a bidding war on this thing. And I thought, I'm going to get to learn how to do this transaction. And it all went by like a freight train. We had like 15 offers on this thing, all cash. It goes into escrow in like 5 days. And I'm kind of looking around like, what's going on? I don't know. My senior agent goes, shut up, dude. You're getting a paycheck faster than anybody could ever imagine. I'm like, but I didn't learn anything. He goes, learn from the money coming in. And I'm like, okay. And now I look back and I'm like, man, I wish there was more deals that were like that, It's one of the few, my mentor that brought me in, it's an interesting job as a broker. But he had a great saying. He says, Eric, it's the most overworked and underpaid job for the first 3 years, and the most, overpaid job for thereafter. Like you just got to weather the storm on your coming in as a broker. Like any commission only job, it could be life insurance, or could be anything where you're just eating what you kill. It's going to tend to suck at the beginning, but if you can maintain and persevere, that it becomes very lucrative, but never really easy. I always say it would be a great business if it wasn't for buyers, sellers, appraisers, banks, contractors, tenants. It'd be a great business, right?
Humans.
You got people, you got demand. You got demand, you got deals. If you got deals, you got to deal with people.
Yeah, I can relate to the several years of underpaid, overworked in the field of acting.
Yeah.
It's the exact same. I'd say, it's longer than 3 years for most people.
What's the staying power? It's like the same for both of us, right?
Maybe I shouldn't have raised my quality of life quite so much, thinking that this was always going to be the case.
Yeah.
Oh, brother.
Yep.
I think in both of our jobs, the living a frugal life thing is huge, because the last thing that you want if you're, an aspiring actor who's maybe got some momentum, but not George Clooney momentum, or guys in commercial real estate. It's like, if you can, get a nice chunk of money in from something you did, our human nature is like, all right, what am I going to treat myself to? It's like, if you can stay in a frugal place and be happy, man, I think that sets the tone for a long-term success, right?
I think in general, people who live a minimalist life, like minimalists, there's a group of people out there that
sure,
really, really, really get off on getting rid of as much stuff as possible, are way happier not searching for a hole to fill, or you're not searching for things to fill your hole. What am I talking about now? Jesus.
Hey, is there children listening to this? Because you're going to have to put like some sort of warning beforehand.
I will say this is not made for children on YouTube for sure. But yeah, I guess my point is, with anything, when you find that part where you can just let go and realize that what you've got is more than enough, who you are is more than enough, then that can change the way you walk, change the opportunities that you attract. That's just good.
Gets rid of that desperate stink.
Yes. Which
you can see that on people, man.
Yeah.
You know what? It's exactly right. Like we're going down a philosophic highway, but it's welcome, and it does apply, because in our jobs or in our investing, like who doesn't want like nice shoes or a nice car or a boat or whatever? Like it's common. It's common that we do want that, but like we've all seen people, and maybe I was like this earlier in life. It's like we put that way too far ahead of like everything else,
right?
And that you're just chasing the dragon at that point. So I think it's enlightening from what I've learned reading and meditating and stuff about like you're just saying, like our blessing is being alive today,
right?
And being able to like see our family and friends and go have a burger and a beer tonight, and not worrying the hell about A, what happened yesterday, but B, too much about what's going to happen tomorrow. Am I going to get that deal? Am I going to be able to buy that? Whatever. It's like,
right.
I feel like really happy that I've just like let a lot of that go, and hopefully it comes out in like the golf swing and brokerage, right? Like,
yeah.
Give less of an F and everything goes better. Imagine, right?
Yes. Give less of an F and the MFs are going to flow in, right? Mm-hmm. That's right.
Oh boy. Okay. Well, Eric, man, thank you so much. I want to be cognizant of your time.
Are we doing a quickie quiz?
All right. Eric, at the beginning of the episode, mentioned that there are two types of owners.
Mm-hmm.
What was he talking about?
He's talking about ones that are going to be active managers and others that will hire third party.
Beautiful. That's exactly right.
Boom.
Eric?
Purchasing real estate, whether it's in a major metropolitan area or a more rural area, what would be the differences in what you would expect as a return?
Well, in a more metropolitan area, you've got like cyclical appreciation, which you wouldn't necessarily have.
Right? Look at this guy.
Yeah, this guy's really listening. I didn't really. He says he's ADHD, but I think he's lying.
I thought you would get him to. I might be able to get him on this one. Eric shared earlier. He didn't really phrase it this way, but I think you'll understand what I'm saying. What are the two most important things about a property?
We're talking about motherfucking properties. I'd say optimize sellability, so the upkeep, and tenants, the good tenants. Is that what you're talking about?
Let me see if I can lead you there.
Okay.
All right. Growing up in church on the weekends, all right, if you're in Sunday school and somebody asks you a question, what do you just automatically say? What's the answer?
Jesus Christ.
Okay, that's right. If you're talking about real estate,
yeah,
and what's the most important thing? What's the
location?
Yes.
Location.
Okay, so those were the two things he said: quality of the asset
and location. Yeah, location,
right.
location.
All right.
I didn't intonate that enough, but it's sort of like we kind of all know that. It's like you can have the trashiest property in the best location and you'll probably be fine. But yeah. He did good though. He did good. I'll give him probably A-.
Yeah, maybe a C. The level actor I'm at, I guess. Tell us the name of your podcast one more time.
Oh, yeah.
Yeah, my podcast is called Everything Apartments. It's on Apple Podcasts, Google, Spotify. I started doing that beginning of 2021, and it really is nuts and bolts apartment ownership, management, investing topics. And I generally do have a guest on there. I think I've only done once or twice by myself because I'm afraid to sit there and babble by myself for a half hour. So I've got some, I pretty much would tell anybody that's like maybe going to think about buying apartments, like listen to some of the episodes, because I think the challenges could be similar no matter whether you're sitting in California or, anywhere else. It's kind of a universal plug. So, I hope you check that out and let me know what you think of it. All right.
See you, my friend.
Have a great weekend, boys. Happy Easter.
Happy Easter.
Yes, sir. We good?
Yeah, we're good.